Welcome to Homeschool. Class is in session. Today's topic, mortgage products. And we get it. They can get really confusing. FHA loans, conforming what? USDA loans? Are we talking about inspecting meat products? Today, we're gonna break it down into one simple class that we're just gonna call 7 loan types you need to know before buying a home. And don't worry, we'll keep the video nice and short, unlike the title. To start, let's get you comfortable with 2 of the most common loan types. That would be FHA and conforming. FHA loans are insured by the Federal Housing Administration, FHA, which is part of the U.S. Department of Housing and Urban Development, HUD. FHA loans can sometimes have looser restrictions overall compared to other loan types, aka potentially lower credit score requirements and down payment requirements. Another common loan type is conventional, which includes conforming loans. These loans are backed by the large government-sponsored entities Fannie Mae and Freddie Mac. You can think of conventional loans as an umbrella term. This is because a conforming loan is actually a type of conventional loan that is within the program limits set by Fannie Mae or Freddie Mac. These loans usually have slightly higher requirements for down payments and credit scores than FHA loans, but potentially lower rates. Something to keep in mind. These are very simple explanations for these loan types. Your personal situation matters a lot when it comes to products, their pricing, and what's best for you. So, call me. We can help. Next up is another big one, VA loans. These are loans backed by the Department of Veteran Affairs, earned by veterans and active military personnel. The reason VA loans are such a big deal is because they require 0 down payment. You also don't have to pay monthly private mortgage insurance, or PMI, and there are no hard loan limits. Your only limit with a VA loan is whatever you are personally qualified to borrow. Next up, we've got USDA loans. Yes, it's that USDA. These are loans backed by the U.S. Department of Agriculture, and they're aimed at rural and suburban homebuyers who meet specific eligibility criteria. USDA loans can often have 0 down payment requirements, more affordable mortgage insurance, and potentially lower rates. Next, we've got to talk jumbo loans, also called non-conforming loans. These loans are big, literally. Jumbo loans are loans that exceed the loan limits set by Fannie Mae and Freddie Mac. Psst, that's why they're called non-conforming. Because jumbo loans are usually a much higher amount, there are a few things you need to keep in mind. Jumbo loans tend to require better credit and a larger down payment than the other types of loans. Interest rates can also be higher because of the larger loan amounts. People typically get a jumbo loan if they're buying a luxury home or if they live in a high cost of living area. Now, what about homes that need renovations? Well, that's where a renovation loan can be useful. A renovation loan combines the home purchase amount and the cost of the renovations into one single loan. This can be used either to renovate your current home or if you're buying a home that needs a little bit of TLC before you move in. Something to keep in mind. These types of loans may require a detailed budget proposal in order to get approved. The last loan type on our list, but certainly not the least, is the reverse mortgage. A reverse mortgage is a special type of loan available to homeowners age 62 and up, designed to help turn your home's equity into cash. You typically have no mortgage payments, but will still be required to maintain the property, pay the taxes and insurance, and all that good stuff. Okay, I'm done now, I promise. Congrats on watching an entire mortgage video without falling asleep. And hey, I know you learned some things too, right? That's what this is all about. Class dismissed.